Hello, friends. In 2024, there is a lot of expectations that interest rates are going to fall. And it's not without a reason. You have elections in 5 dozen countries. The economies must be pump primed, and sales and employment of the economic data must be massaged all over the world. With 5 dozen countries going to elections, the pressure on central bankers to cut rates is humongous. They might just go out there and cut rates a few times, but are interest rates going to remain down? I don't think so. I'm Vijay Bhambwani. I've been trading these markets since 1986, and through my videos, I'm trying to reach out to fellow risk takers and systems traders. I don't provide any commercial services, and I'm trying to reach out to fellow like minded traders and CEOs of prop trading firms, of which I am one, to come out there and connect with me. Well, since 2021, to be specific, October 2021, I have been telling people on my social media accounts that interest rates seem to have bottomed out and cost of funds will start to rise. Why have I been saying that? And why am I saying that in 2025 interest rates might just rise? Number one, elections will be over in 60 countries, approximately 60 countries in 2024. So all the hidden warts, moles, pimples, blemishes, scars on the skin of the economy in these countries will slowly get exposed. The weaknesses of these economies will get exposed. And yes, those economies, many of them are weak. And why did I say cost of funds must go up? Look at the history of central banks' rate cuts. After 9/11 happened, we saw the horrendous side of two aircrafts going and slamming into the World Trade Center Tower 1 and Tower 2. The US Federal Reserve started cutting rates like there was no tomorrow. They had to stimulate the economy. You call it by any other name, it is quantitative easing, fiscal stimulus, currency printing, etc. Call it what you want. It is all inflationary. So 2008 crisis, the global financial crisis hit, and the Fed went into overdrive and printed currency far more aggressively than in 2001. In 2020 came COVID, and the currency presses were worked around the clock 24/7, and money was printed like nobody's business. Now you know that at some point in time, and every currency note that is printed is an IOU, is a debt that the government is taking from the people, which is why on the currency note you will read, I promise to pay the bearer of this note XYZ amount, depending on the denomination of the note. Governments world over have realized that they can't print too much currency worldwide without triggering hyperinflation and having people out on the streets protesting against the inflation, the crippling inflation, which is why they have no other recourse, the central bankers have no other recourse but to approach the bond market and borrow money at an interest cost. And guess what? Bond markets are for big boys. The retail doesn't go there. The retail actually asks for interest rate cuts so they can pay their credit card bills and they can finance their EMI based loans at lower interest rates. This money has to come from somewhere. Now you're talking about borrowers. Wall Street and Dalal Street experts tell you that lower interest rates are good for the economy because they stimulate the economy. Have they told you that this money has to come from somewhere and it comes from check writers? Guys who buy bonds, guys who put fixed deposits into banks, guys who buy treasury bills. Now these guys have been given abysmal, marginally above zero or even negative interest rates adjusted for inflation in the last 2 decades or more. Do you think they are in a mood to write fresh checks at those interest rates? Now that they know the central bankers world over, in Europe, in America, in Asia Pacific, in Southeast Asia, when they know that these central bankers cannot print any more currency, they have no recourse but to come to the bond market. What do these high net worth individuals and ultra high net worth individuals, corporations, banks, investment institutions, pension funds, etc. do? These guys don't come out on streets with red flags and placards, etc. What they will do is stop writing checks. They will stop writing checks till they are given higher interest rates. So you think the Federal Reserve or the central banker determines interest rates? I can't stop laughing enough. This is something that we were taught in school by people who didn't know better. The central banker does not determine interest rates. Market forces determine interest rates, and in the market forces, the needles and gauges of the markets are moved the maximum by the biggest check writers. Now, these check writers don't want negative interest rates. They don't want 0.1 and 0.2 and 0.5% net yield after inflation. They want a bigger chunk of yields. Come 2025, when the warts, moles, pimples of the economies that have been pump primed and gravy covered for elections, once that gravy kind of wears off and the government comes back to the bond market to borrow money, world over, I think central bankers will come out and give you justification of why interest rates need to go up higher. It's just that the story will be changed. All that changes in the market is the narrative. What you need to think is a 360-degree worldview of the market and plan ahead. That's what I have been telling people whose minds I can influence, that, hey, we guys are brain warriors. We trade, we fight, we win with our ideas. And as long as we stay ahead of the crowds, we are going to be just fine. Keep options open of interest rates going up in 2025 or later, but very shortly thereafter, not too much later. So keep the powder dry. I don't think the fixed income guys are going to see tough times ahead. As a matter of fact, 2025 onwards might just see the return of better times ahead. And in between, if there are any more ideas like the 4 gilt funds that I recommended to you, which we got in and got out clean with superlative profits without too much of an effort, if any more such opportunities come up, I'll be very happy to share with my online family. Do monitor my free Telegram channel. That's where I put up all my ideas in one place. Thank you for hearing me out. Till we meet again in my next. This is Vijay Bhambwani signing off for now, but not before reminding you to subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put about here. In the comments segment, do let me know what you would want me to record next. Also, help me reach out to fellow like-minded smart investors and traders like yourselves by referring and sharing my videos with your friends, family, and online social media groups. Till we meet again in my next, this is Vijay Bhambwani signing off for now. Have a very, very profitable day ahead. Thank you. Bye-bye.